the simple uncertainty of months waiting for a new government to be formed, and the clear risk that we move away from the more effective government that Italy has enjoyed under Renzi would be a clear negative for investors.
So, Mr. Lawson, can you explain what this Italian referendum is about and why it's so important for the financial markets?
Yes, indeed. The referendum is itself meant to simplify the Italian political system by reducing the power of the Senate, removing, for example, its right to pass motions of no confidence. It is also designed to take away power from the regions within Italy and give more to central government. The major reason why it's important and riling markets at the moment is that Matteo Renzi, the country's current prime minister, has stated more than once that he is likely to step down in the event that the referendum were not to be passed in the pending vote.
So what are the downside risks that could be generated from the political uncertainty in Italy?
Well, these are very substantial. And just to put it into a little bit of historical context, the yield on 10-year Italian bonds has basically doubled over the last 3 months. And Italy has clearly underperformed Spain and other European countries in that period. With the country facing an ongoing heavy stream of financial refinancing needs, and with its bank system in considerable difficulties, this all comes at a very difficult time for the country. It would basically move back in to a period of political uncertainty, with elections unlikely to be held immediately and potentially not actually taking place until as late as mid-2017. While in the meantime, at least 8 Italian banks are facing some degree of financial stress, and the country has over 400 billion of gross borrowings to undertake during the course of 2017. So there are real dangers that this would add to existing severe pressures on the financial system, and also could, to some degree, revitalize the country crisis that we had in the Eurozone a few years ago. This was actually hinted at by the European Central Bank in its Financial Stability Review released this Thursday. And in that, the tone was singularly negative, pointing to a revival of sovereign risk factors.
So how sensitive is this to the Italian banking system?
In simple terms, it's very sensitive. Basically, Italy's banks have considerable difficulties. They have some 360 billion euros of impaired debt on their books, which exceeds their total equity at the moment. And we're going through this very week the highly sensitive efforts to persuade subordinated and tier 1 investors in Banca Monte dei Paschi to exchange these instruments for equity, a prerequisite to the bank's planned capital increase, without which it really does face a very high risk of resolution. And it's not just this one bank that is facing difficulties. Indeed, only yesterday, the Financial Times raised the idea that as many as 8 banks could face severe problems in the event that the referendum were to lead to an adverse vote and increase the degree of financial sector uncertainty. So overall, Italian banking is very definitely a problem area, and this political uncertainty would exacerbate the existing severe problems it faces.
What other political risks in Europe should the investor be careful of?
Investors are clearly concerned about the potential position of the 5-star or Cinque Stelle party within the Italian political system. It is close to being the largest party in a number of recent opinion polls, and could even potentially qualify for the majority prize that has been introduced within the new Italian electoral procedures, also passed by Mr. Renzi. And if there were to be a change of government, that, if it involved the 5-star movement, could lead to a vote within Italy on the suggestion that the country should leave the Eurozone, which is a stated element of Cinque Stelle policy. Even without that, the simple uncertainty of months waiting for a new government to be formed, and the clear risk that we move away from the more effective government that Italy has enjoyed under Renzi, would be a clear negative for investors. there's a real danger, even without Cinque Stelle, that we could move back to the situation in which Italy had a series of frequent government changes with a lot of horse trading going on for policy to be passed. And that clearly would be a retrograde step when the country is already under fiscal pressure.
Well, thank you so much, Brian Lawson, for speaking with us today from London, England. It's been a pleasure.
Thank you very much.
And thank you at home for watching. Don't forget you can catch previous interviews by clicking on the Dukascopy TV channel. Goodbye for now.